Hello and welcome to another update video about XRP. So on the daily chart here, or on the 4-day chart it is actually, we still see that XRP is consolidating. We're still holding above the 2021 swing high, which is the $1.96 level, and the price certainly is still holding above. No, not breaking it at the moment, but it could be broken. I mean, that's why we're tracking the smaller time frame, right? But for now, consolidating above, which keeps the triangle pattern that I'm tracking on the smaller time frame actually alive. So we can take a look at that in a minute. The overall idea is that the market is, as I said, likely consolidating, and we could get one more high in this cycle, maybe two more swing highs. Current thesis is that a fourth wave bottomed in 2020. That's the blue scenario. Both are bullish at the moment, and it's just that the difference between them is, okay, do we get only one more high or do we get two more highs, yeah? And I think short term we can't really tell the difference. In the yellow scenario, a triangle pattern unfolded here. In the blue scenario, it's a different structure. We're dealing with a larger diagonal pattern. And again, the difference will probably be, reveal itself after the next swing high, actually, right? So it's going to be interesting. Overall, I think we have to be ready for continuation of the correction, because while Bitcoin moved up a little bit today, the correction seems incomplete. So I'm still tracking an ongoing correction on the Bitcoin chart, which just threw a bit of a curveball in, but not much changed. So XRP is likely going to continue with its correction, even though it moves at times independent from Bitcoin. At the moment, they are all caught in this correction, and the volume is low because sort of, just before the new year and everything. So let's take a look at the smaller time frame. By the way, here support on the 4-day chart is between $1.05 and $1.79. We are still quite far away from that. Looking at the short-term chart for XRP, you see that we're still moving in this sideways consolidation pattern. I've removed the Fibonacci support area that we were tracking here before because it provided not really any support. So there was a Fibonacci zone. The price didn't really care about it. Briefly, yeah, but it moved down below it, so there's no use for that anymore. And, you can see that this here is still this potential triangle. It's still valid. And just to remind you of this potential triangle, it is an A, B, C, D, E structure. I still think it would look best with another move up in wave C of D and then a higher low. Well, that would be the bullish count, right? That would be the bullish count. But also in the bullish count, the correction is likely still unfolding. So we're moving like sideways, ongoing sideways action. A few more, let's say sideways, a few more days maybe, or not a couple of weeks, but maybe a few more days of sideways grind. Or a week or so can't be ruled out in the yellow scenario. So here I don't expect the correction to be complete yet. And that will come into place or into force, this scenario, if there is a break below the 20th of December low, which formed at around $1.96, then it's likely going to be the blue count. Even if we go higher and then break down, it could be the blue count. The blue count allows for a lower wave 4. Again, same thing, correction is likely still unfolding. But in the blue scenario, it would just be something like a WXY structure probably. And the Y wave is an ABC, A, B, C. But also we could say maybe the B wave topped already. So it's about, and for me, the microstructure here is noise. What really matters is, do we hold the $1.95, $1.96 level? Which is getting obviously now critical because we're already testing those areas down there. We have reached this yellow trend line here where the price found support before. But really from a triangle point of view, the market should not break below that $1.95 level, 196, which again is the 20th of December low, because it would likely lead to invalidation of the triangle. I mean, it could theoretically extend, but then a break below the 10th of December low, which formed here at 190, that would be really the formal invalidation point. And I mean, in that case, when we break below 195 and 190, the focus will shift to this blue zone, which hasn't changed, between 139 and it's between 180 and 139, with additional support at 163 and 153. So short-term focus is on this support area here, the trend line, but more specifically the previous two swing lows. and there is not really that strength yet short term, but I still like the idea of another leg up, but it hasn't really started. But that being said, it's not a great setup anyway within this range. You know, this is more like, okay, we're tracking the waves, but trading within a triangle is typically not recommended. From an Elliott wave point of view, it isn't. So I'm just simply tracking the waves. Don't make the mistake to think that these would be trading suggestions. Typically 1-2 setups are the best, or yeah, actually the 1-2 setups, right? Maybe AB setups, you know, but they are a bit more difficult to trade, require a little bit more skill. But typically it's the 5-wave move up, 3-wave move down move we're looking for. And then ideally a continuation to the upside. This would simply be within a corrective pattern. So you're trading a correction in a correction, which is challenging. But yeah, overall, I see this as a correction, a consolidation in an overall uptrend that is probably not finished, and levels should be clear. So I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.